This is a remote work company. In the notes to the financial statements, the CFO's office has given the definition of deferred sales commission costs, and they've used this real estate to give us no real details. When they pay a salesperson a commission for a sale this year, they account for it over a period of 5 years. Maybe somewhere else will tell us why. These sales commissions only show up in the income statement as sales and marketing, and they definitely are decreasing year after year after year. What I want to highlight from this page in particular are these percentages of total revenue for research and development and for sales and marketing. These have the same denominator, and so it's kind of a useful comparison. While the research and development has increased by about 2.1%, that is more than made up for by lower sales commissions, 7.3% lower in the latest year. So the company it is transitioning from acquiring customers through these relatively more expensive sales commissions to now acquiring customers thanks to software licenses. The great news here is that this new way of acquiring customers, these software licenses, are clearly a more efficient way to acquire customers. And this isn't theoretically more efficient. This is revenue has already come in more efficiently. The company is only just in the beginning stages of benefiting from this shift. In another part of the CFO's office notes, I finally found an explanation for what are these deferred sales commissions. Here they are listed as a subcategory of deferred tax assets. This company years ago figured out how to prove that its sales commissions were leading to 5 years of revenue on average. The on average and the proof are the interesting parts. Who did they prove it to? Apparently they proved it to the tax authority of their country, the IRS.
Hey, if you're getting more comfortable uncovering the stories behind the numbers, please like and subscribe.
If you prove this to most people, they might be like, okay, good for you. But when you prove it to the IRS, it actually means that you can spread out the expense over the 5 years that they were mentioning earlier, which actually reduces your taxable income year after year after year. From what we've been seeing all over this report, whatever it was that they proved, they're not really allowed to do anymore. I wouldn't be surprised if they got some sort of tax break during the pandemic, given what it is that they do, which is help remote workers. They've been benefiting from that tax break for a few years post-pandemic. Back to the income statement. If we simplify this weird amortization situation to this company got a tax break a couple years ago and is still benefiting from it, then what this row, sales and marketing, includes to a large degree is tens of millions of dollars of quote unquote tax breaks to reduce the taxable income this year, and yes, this year as well. Since all of these sales and marketing are allowed to be substantially higher according to tax law, these net losses are allowed to be more negative than they would be otherwise, leading to the CFO's office being very proud that they've been developing a big deferred tax asset, shielding them from taxes for as long as possible. In the cash flow statement, to a large degree, the benefit of those tax breaks are this row, amortization of deferred sales commission costs. We now know that in this industry, it's sizable year after year after year, but isn't going to last forever. But still very large numbers. In fact, some of the biggest numbers on here. In 2022, for example, the tax break alone essentially knocked them into being cash flow positive. And that's tens of millions of dollars cash flow positive. Not too shabby at all. Now, as I probably revealed in the H&R Block video, I am definitely no expert on any tax code. I just barely was able to figure out what's going on with this company today. But I've been told from a few sources the tax code can be thought of as the government incentivizing behavior that otherwise would not be incentivized. In the case of this company rapidly equipping other businesses into managing hybrid lifestyle workers, making it possible to work remotely almost single-handedly, someone somewhere writing the tax code seemed to have left it open to interpretation for this particular company to gain this very big bonus. But good on 8x8 Still don't understand the name, still don't understand their tax loopholes, but something I do understand is cash flow positive. Please like and subscribe. Remember that this channel is all about hearing the stories behind the numbers and then developing an intuition as to whether those stories do or do not represent value in the current markets. With that in mind, please take a moment to practice by guessing whether the Sage Seeds AI is going to give this a high or low value ranking for the 2023 season. If you've got anyone around you that you can debate this with or explain your reasoning to, that helps tremendously while learning. Do that now. 8x8 is ranked 10 out of 76 in value for the 2023 season, in the top 15% of all companies so far. I'm now going to interpret the Sage Seeds AI's reasoning. This company has never made money on the income statement. It's never lost a lot of money, and it's losing less money every single year. But this tax break that we were able to just barely identify has alerted the Sage Seeds AI to the fact that it has been years since this company has been legitimately cash flow positive. Remembering that income statements are what we present to tax authorities, but cash flow statements are what we actually keep to know what's in our bank accounts. The bank accounts of 8x8 have been piling up with cash, legitimately piling up with cash. The very first thing we noticed way back at the beginning when we saw the cash increase in the balance sheet, that is pure profit in a brand new, fast growing industry. Sage Seeds AI also highlighting that this industry does not require any meaningful amounts of capital investment in order to generate income, and is very much the sort of runway industry. Now, of course, there are some risks preventing this from being ranked higher. By and large, the positives starting to pile up higher than the negatives. Let me know your reaction to this in the comments below. Have you switched to hybrid working yet? Do you know anyone who has? Anyone somehow still fully remote in this day and age? Setting up permanent live-in cubicles like in the Matrix movies. Share your wisdom, share this video.